program is to analyze the effectiveness of a proprietary investment algorithm, not to recommend any stocks for purchase. Investors should be cautious about any and all information provided during this program and should consider the source of any advice on stock selection. Various factors may influence or factor into a stock analysis or opinion. All investors are advised to conduct their own independent research into individual stocks before making a purchase decision. In addition, investors are advised that past stock performance is not indicative of future price action. You should be aware of the risks involved in stock investing and use the material contained herein at your own risk. No guarantee is made about the accuracy or validity of any information presented during this program. And no responsibility will be taken for any errors or omissions which may have occurred. The analysis, ratings, and/or other information presented during this program do not provide, imply, or otherwise constitute a guarantee of performance. I'm not making recommendations. Neither is this algorithm. We're just looking at it. And don't buy anything, basically. Yeah, so that's the podcast. Is it done? It is done. The algorithm has run. It takes about a half hour every day. It runs every day after markets close. So let's very first look at today. Alright, Navi. Of course, Navi is the first one that came up. Navi dropped an insane amount today. Let's look at Navi. It dropped like 15% almost. So what happened is two things. One, the state of Pennsylvania announced that they are suing Navi today for something to do with student loans and not doing them properly. And also they announced that they are no longer doing their stock buyback program. And so what happened is everyone panicked and they fled, and it dropped 15% today, which is insane. That is a huge drop. Like that is what you call a perfect storm of negativity. So that's definitely affected our picks from last week and from week 2 when we purchased Navi. And it basically threw off the whole thing. So we'll be looking at Navi and trying to figure out what to do about it. It's a student loan company, by the way. It's like a financial company. That's what it does. So let's look at the what you're looking at here is basically the previous week's status. So week 1 is doing great. We're up 6.75% in 3 weeks. Compared to the market being up 2.26%. So we are just absolutely destroying it. Now you can see on the right here, highlight it, is the performance week to week and how these portfolios are doing. So this one was down the first week compared to the market, up a lot the second week compared to the market, and now is up a lot again compared to the market. I'd like to point out that 2 stocks that I picked out in week 1 are above 10%, which is, in my opinion, pretty good. Week 2, Navi got us. Navi got us. Yesterday, this position was up, and now it's down 11% in one day. That is crazy. And as you can see here, it is the #1 killer of our performance, which is kind of nuts if you think about it. So first week, we were up 4.7 compared to the market's 0.26, which is really, really good. This week, we are up. We're down compared to the market, specifically because of Navi, NAVI. So that one stock is killing our week 2 portfolio. Yeah, the market's up 2% and compared to our 1.83. So not doing all that well. However, you'll notice we've got 2 stocks here that are above 7% and 8%. So that's pretty good on those 2 stocks. Now week 3, which is last week's picks. It's only been 1 week. We're up 0.52% compared to the market's 1.8%. So not winning, but it's also just the first week. Now, I did some analysis and I figured out those are the 5 out of the top 10 that we purchased. It's up 0.52%. But here, I put all 10 of last week's picks into a hypothetical portfolio because we kind of randomly decided to do 5 of the 10, and the filter that we chose to throw some of them out really weren't all that good. So Navi, again, totally not good on that one because of the outside influences. But we've got Alaska Airlines up 6% in a week. MHK is up basically 5% in a week, and NWL is up 5% in a week. That's pretty good. So we're going to go into, once we look at the other stocks, some ways to filter out that based on RSI, which is called a relative strength index, which is something we're going to add to the algorithm this week. Let's see today's picks. Pretty much the same. Again, NAVI is number one pick because it dropped 15% today, and there's kind of a lag time in this. I do want to clarify that I did change the algorithm a little bit. We reduced the weight of the dividend in the ranking by 20%, and we increased the weight of the estimated return percentage by 20%. So hopefully shuffled it up, and then so it'll be estimated return is helping in the ranking and dividend is helping less in the ranking. So we got Navi. I'm absolutely not going to buy NAVI because I don't know what to do with it. Yeah, it dropped 15%. It's like, oh wow, which of course made the estimated return go up. So we're going to leave that one as it is. AGN again was featured last week and is again featured this week. Looks like the PE ratio is very, very low. The estimated return is very, very high, and the perfected rate is 0.557. So what I want to do this week is actually look at a couple momentum indicators of these stocks. So what I've done is I've written what you're looking at now is a custom Python script which gets the RSI, which is the relative strength index, which is a scale from 0 to 100 where it's an indicator of how overbought or oversold a stock is. So for AGN, the RSI indicator says 40. So it's pretty low, but it's not oversold. So that's a good one. I'm going to write that down. So I'm not on a time scale today because I'm not going up to the boundary waters again. So we'll be doing a little bit more in-depth analysis of these. So AGN is a 40 RSI. So looking at, I did the math for last week's, can you see this? Last week's 10 picks, and I did the math where if you picked the 5 lowest RSI out of the 10 picks, it would have been up 2.77% yesterday. And if you picked the 5 highest RSI stock picks out of those 10, it would be down 1.23% in the first week. Now, again, this investment algorithm is for long-term, 6 months to a year. So we're going to buy and hold, which gives us time for stocks to kind of wobble before they go up. But if we can eliminate, if we wait until they're primed to go up, we can kind of reduce the amount of time that they're either go down or go up. Does that make sense? So we're not trying to time the market. We're just trying to, we don't want to buy overbought stocks, basically. So what we're going to do this week to choose the 5 out of the 10 is pick the 5 with the lowest RSI out of the top 10. We're going to say top 11 because I'm not even going to look at NAVI. So that's what we're going to do. So AGN is good. It's the second rank, so we're going to add it with the 41 RSI. Next up is MHK, which is up, I believe, 4.5% since last week. So that's pretty good. Pretty good. Let's P ratio still very low. I believe it is actually the lowest in the S&P 500. Where's the P ratio here? There's a lot of stocks that have negative earnings. Then where's the first one? MHK 5.13. So it is the lowest PE ratio in the S&P 500, which is good. No dividend, which I'm okay with such a low PE ratio. An 8% return potential, which is really not that high, but I mean it is. That's a good chunk of change. And then the buy rating is really good at 0.57. So let's see if we can get the RSI for that MHK. These other numbers that this is calculating is the simple moving average, which I was also experimenting with last night, but didn't actually come up with anything meaningful out of it. So an RSI of 59 is pretty high. So the scale is 30 or lower is oversold, right? Yeah, and then 70 or higher is overbought. and then 50 is just neutral. So 59 there is roughly 60, so it's not quite oversold, but it's getting there. So it has some room to move, I guess. Let me check my audio here for a second. I'm not actually sure if... let me check my audio here for a second. Okay, yeah, so it's working. So MHK has only got an 8% return, so I'm not really too excited about it. But and then the 59 RSI, I'm not really all that excited about either. But we'll look at the rest of them too. So fourth, VIAB, 7.51 PE ratio is really good. 43% potential return. That's really good. That per factor rating is a 0.17, which means it's a buy, but it's not a strong buy. It's like a weak buy is how I would describe that. Let's see what its RSI is. The data, the source that I'm getting all this RSI and simple moving average data is, I've noticed, very, very slow. So that's a 42. Gotta like the 42. That's pretty good. I like that one. We'll keep that one on the list. CTL, CenturyLink. So CenturyLink has been weird because it has been kind of, the price has been deflated sort of a little bit because they've been in the talks to purchase what is it called? Some other telecommunications company, and they finally got approved the other day, and so they popped up a lot, a significant amount. Yeah, so they still have an estimated return of 28%, which is good. They have a solid buy rating at 0.25 roughly. Dividend is still 11%, which is still really good, and it's 5th rank. And then the PE ratio is 29, which really isn't all that good, but that's okay. Let's look at its RSI. CTL. Another thing I need to come up with, if anyone has some suggestions, is what to do about NAVI. Is it going to go up again? Somehow I doubt it, because everyone kind of panic sold. But the question is it done for the day or for the short term? Has it already adjusted to the price it's going to roughly stay at, or is it going to drop significantly further? I'm not sure what to do about it. So CTL, RSI of 55, 56 really. It's average. The 5-day moving average is higher than the 10-day moving average, which is good. The 5-day moving average is higher than the 20-day moving average, which is good. The 10-day is higher than the 20-day, which is good. The 5 is lower than the 50-day, so it gets 3. Okay. I haven't really figured out how to use those yet. So supposedly the simple moving average, if the shorter time period is higher than the longer time period, it's trending upwards. But there's not really a standardized time period to compare to a different time period, if that makes sense. And so it's basically, I'm looking at those numbers, but I'm not sure what they mean yet, so I'm not really taking them into effect. So CTL, pretty good, I guess. It's swinging up. FL, Foot Locker, coming in at 6. PE ratio is really low. It's 8, roughly. 3.5% dividend is solid. Closing price is up a little bit. 35% estimated return, and then a solid 0.23 buy rating. That's very, I mean, that's good. So let's look at its RSI. Foot Locker. Who buys shoes at stores nowadays? Isn't that what the internet is for? I don't know. I haven't actually bought any shoes in a while, and I don't think I would go to Foot Locker if I did. And I suppose they also sell like athletic clothing, so maybe they're a bit more diversified than just feet and shoes. Wow, this is slow. Okay, well that's doing that. Let's look at the next one. GT, Goodyear Tire. It's kind of funny how even though these stocks in the top 10 have moved around a lot, have gone up and down significant amount, they're still tend to be at the top 10 because they're still just such a good value, such a good I guess potential return here. So 7.2 is a really good PE ratio. Estimated return of 13%. I mean, it's not good, it's not bad, it's just kind of okay. I like that 0.6 buy rating. I really do. I like it. I like it a lot. Alright, so Foot Locker. It's got a 39, let's round to 40 RSI. The 5-day simple moving average is lower than its 10 days, so it's basically not trending. Alright, let's do GT. Hopefully it'll be fast. It's never fast. 62 RSI, so it is getting close to being oversold. This 5-day simple moving average is higher than the 10-day. Sorry if you guys can't really see. It's hard to, there's a lot of data on the screen. So the 5 is greater than the 10, so it's kind of trending. The 5 is greater than the 20-day simple moving average. The 10 is higher than the 20 simple day moving average. The 5 is higher than the 50. That's pretty good. The 10 and the 20 are both higher than the 50. And let's see, the 5 is 33.33. Wait, 5, 10, 20, 50, 100 is higher than the 100-day moving average, so that's really good. The 10 is higher than the 100-day moving average, and the 20 is not. So 1, 2, 3, 4, 5, 6, 7, 8. It has an 8. So is that in an uptrend? Yes. Sort of. Maybe. It's very strongly indicating that it's in an uptrend, but it's also very strongly indicating that it's close to being oversold. So, alright. Next, after GT, we've got Alaska Airlines, ALK. PE ratio 13, not great, not bad. Dividend 1.2, 1.5%, it's good. 24% estimated return, solid. Oh my gosh, 0.68 buy rating. That is really high. It's come down, but it's still really, really high. So I like that one a lot. Let's look at its RSI. So next week, if I end up doing this properly, what I'll end up doing is this RSI program, I'll integrate it into the actual algorithm itself, but it's going to take some tweaking because it's got to be a lot faster than this, because I'm doing 500 stocks every day. So it can't take 5 seconds to run because that's just ridiculous. So 61 RSI, so it's also close to being overbought, but it's not overbought. The 5-day is higher than the 10-day moving average. The 5-day is higher than the 20 moving average, day moving average. The 10 is higher than the 20, so could be trending. The 5-day is higher than the 50-day moving average. And then the 10 is lower than the 50, so 4 trends. I don't know, that 4 is kind of an arbitrary number. I'm not really sure what it means. We're just looking at it. Navi is Navicorp, a financial corporation that makes student loans for colleges. A group of state attorney generals are looking to their sales practice, hence the sell-off. Looks like an opportunity, but when? Yeah, so that's the question, is when is it an opportunity? So they announced the they announced it today in PA, in Pennsylvania, and then they also announced that they're no longer doing their stock buyback program. So I think that's why it got hit so hard. And they're not doing their stock buyback program because they're going to be using that cash to purchase another financial company that's more technical and modern. So when? I mean, it's still very good value. I'm just not sure when. And when I'm not sure of something, I'm just going to not do it, I guess. All right, number 9 on the list is M, which I don't remember what that is. A 1-letter stock ticker. Macy's. Oh, Macy's. Oh man, didn't they just announce like bankruptcy or something? I'm not really sure. Or they're closing all their stores. So PE ratio is below 10. 9.5, good. 6.9% dividend is good. 17% return is, I'll give it a medium. It's okay. The buy rating is 0.12, which is not great. Why is that ranked so high? Why is that ranked a 9? I guess the 6% dividend is probably helping it a lot. So let's look at its RSI index. Macy's. When was the last time anyone even shopped at Macy's? I think they're having a huge problem because of Amazon, which is basically just driving retail out of business. Although, if I remember right, Macy's has a bunch of new loyalty program, Nordstrom deal fell through apparently after news. That sounds like a rumor, but who knows if rumors are true. Alright. So Macy's is at a 45 RSI, which is low, but it's not oversold, or overbought, I mean. The 5-day is lower than the 10-day, so it is not trending at all. Okay, fair enough. Let's go back to here. And then our 10th, well, our 9th, because we're not looking at Navi. MO, which is, I believe, is it Marlboro? Altria Group. Okay, let's look at what they do. I'm not sure what Altria Group does. Consumer goods and cigarettes. Okay. PE ratio 8.4 is good. Dividend 4% is good. Price target is a 10% estimated return, which is kind of low for 6 months to a year. Its buy rating is a solid 3.33. Yes. What happened here on the 3rd and the 2nd? That's weird. Whatever data source this is using, one of them must have been a bit wonky. On the 3rd, it looks like the price target was calculated incorrectly, so is the per factor rating. And then on the 2nd, it didn't get the earnings per share or the dividend, which threw off that. Weird. One of the challenges with doing programming with the internet that interacts with the internet is that data sources change over time, and so it becomes hard to actually keep things consistent. 52 RSI, and then 60. It is not trending at all. Do we look at the trending things for AGN in them? We'll come back to those because we got one last stock to look at. 11 LUK, which I believe is, I bought that in week 1 and it's up 12% since then, so that's pretty good. 15 PA ratio is not great. Price target, estimated return 16% is pretty good, but not great. Buy rating is 0.75, which is great. That is really good. And then let's see the RSI. You know, maybe NAVI now is the time. Weekend ratings. Yeah, it could be weekend ratings. 68. LUK is at 68, so that is almost oversold. Overbought, excuse me. Is it trending? Yes. 5 out of 10 is trending. 5 compared to the 20-day is trending. The 10 compared to the 20-day is trending. The 5 compared to the 50-day is trending. The 10 compared to the 50-day is trending, and then the 20 compared to the 50-day is not. 1, 2, 3, 4, 5. So 5 trending signals with the RSI of really high of 68. Alright. So ignoring NAVI, we've got AGN, MHK, VIAB, CTL, FL, GT, ALK, M, MO, and LUK. The highest RSI rating is LUK with a 68, so we'll ignore that one. The next highest one is GT with a 62, so we'll ignore that one. And then ALK with a 61, so we'll ignore that one. And then the next highest is MHK with a 59, so we'll ignore that one. And after that it is CenturyLink with 56, so we'll ignore that one. So the next ones are AGN, VIAB, FL, M, and MO are the stock picks for week 4. So again, what I'll end up doing is I'll buy roughly $1,000 of each stock tomorrow around, I don't know, whenever I wake up, around 9:30, 10, and then we'll see how it does. I'll also be tracking all of the top 10 stocks and see how they do in the first week so that I can compare the RSI ratings as I collect data on that to see if it's worth continuing to use this as a selector and if it's worth it to integrate it into the algorithm. Again, last week, ignoring NAVI, which is down 20% since last week. Oh my gosh. We've got one. How much has the market moved? The market has moved 1.8% since last week. So compared to the market, we've done 1, 2, 3, 4 beat it in the first week with 1, 2, 3, with some of them making significant moves. So I think that there's a lot of potential in this algorithm, and it just needs to be refined, basically. Again, thanks for watching. I think that's going to wrap it up for this podcast now that we've got the 5 picks and the 10 data available. Again, these are not recommendations. Don't buy this stock. I'm not recommending these at all. The purpose of this program is literally just to what is the purpose of this program? To evaluate the effectiveness of an algorithm and to make it better. So yeah, thanks for watching. And then again, you can follow us at Twitter at DIRJK_show. We're at twitch.tv/DIRJK, and we're also on YouTube. This algorithm is at perfactor.net, PERFACTOR.net. You can sign. It's not available to the public, although it's obviously working. You can sign up to be on an email list there if you want to be notified when it goes public. Thanks for watching, and then I guess I will talk to everyone later.